The Canadian-based trucking firm TFI International posted a mixed second quarter. The stock rallying about 3% today. The company beat expectations, but the forward-looking forecast weaker than expected. Let's get more from Dan Rohinton, Portfolio Manager at IA Global Asset Management. Dan, thanks very much indeed. TFI, anything jump out for you in these latest numbers?
Yeah, I can see some positive signs moving in the right direction. So think of the U.S. Less than truckload business having a bit of an improvement in their operating ratio versus expectations, and the truckload business holding in reasonably steady. But that being said, there is, call it green shoots in the conversation on top of what is broadly a mixed backdrop for trucking. And then this is the 2-3 year period as the rails are going through their main mega merger phase. And then trucking is going to be in an interesting place from there where they're going to have more stiffer competition, especially for some of the longer hauls. But call it green shoots in the short term, some opportunity to improve as we move to the back half, especially in the all-important LTL business in the U.S. And then from there, it's seeing what industrial demand can do.
Right. And they did that acquisition, didn't they, quite a few years ago of that FedEx business. And there's been glitches since then. It hasn't been as smooth as they hoped.
It's been a tougher deal than some of the others that Transport has done in the past. And what tends to happen is you lose basically package volumes to some of your competitors if your service levels drop. And that's true for most transports as a whole. But in a competitive industry like trucking, you feel the acute pain more. So that's where Transport has been making some significant efforts to try to improve. And we did see some green shoots of specifically that in this quarter.
So Dan, sorry, you may have specified this, but would you be a buyer of TFI stock right now?
I think I'd be neutral on it today. I'd probably wait for another quarter or two. You really have to see the best way to think about it as a virtuous cycle on the upside and a vicious cycle on the downside. So if you can continue to maintain service quality and improve it from here and drive your OR margins, operating ratio margins better, the lower number, the better that is in this case, then I'd be a buyer. So I'm a bit more cautious in the short term, and I'd be looking to add more on strength in Transports because the valuation's discounted enough. You just want to make sure that the operating momentum is in the right place.
What about the broad market, Dan? There seems to be optimism that the trade fires have been put out, but we really don't know how these supposed deals with Europe and between the US and Europe and Japan will actually work out.
Yeah, and I think the market's giving the benefit of the doubt because we're at the stage where, call it 80% of the draft legislation is basically there. So they've hashed it out on a napkin so far. And the big multi-thousand page documents are for a later date. Mm-hmm. So the market's looking at what is largely the napkin math and then assuming that the details will be in broad strokes with what's already been described. There's a few areas like pharmaceuticals. Can you see more of the European Union goods fall under the 0 for 0 regime? So there are definitely nuances, Andy, but I think the main thrust of it is that the U.S. effectively tariffed the European Union without material reciprocal tariffs coming their way. So that's why the market's viewing this as a net win for the United States. Mm-hmm. And I'd broadly fall in that camp. And I think it actually raises, to really take your conversation a little bit further, for Canada, it's an interesting conversation because Europe was supposed to be the tag-along buddy and putting a brave face against America. And now Canada's in a bit more of a precarious situation in its own trade talks outside of the NAFTA 2.0 goods. Or even with it, we don't know for sure yet. So think of the landing zone as more negative than where we started, but think about the clarity as what the market is looking for in the short term, and that is what we're getting.
It's interesting, Politico reporting that so far Canadian negotiators have been essentially getting the runaround from the Americans. They just repeat Trump's talking points. They don't seem interested in an actual deal.
Yeah, and maybe the most baseline way to think about it is Canada needs America far more than America needs Canada. And America is leveraging that significant relative strength to basically force the conversation onto Canada to make the compromises. That's how I would broadly read that conversation.
Visa, it's a favorite blue chip stock of many portfolio managers. I guess the argument is, how could they go wrong? They get a little bit of money every time a transaction goes through millions of times a day. We do get earnings from them after the market. What's your thought on Visa stock, Dan?
Yeah, I think the big question for Visa here is really, are expectations running a little bit too far ahead or not? I'm inclined to say not really. I think it's probably going to come in to be a pretty decent quarter overall. I'd keep a focus on payments volumes as a whole to see how much organic growth they're driving. I think the expectations are quite reasonable for that. And then the flex item is really cross-border, where there has been significant movements in the dollar, Andy, especially as it relates to the all-important US-Europe corridor, where a lot of travel goes back and forth. So normally that is a huge high-margin revenue stream for Visa and its peer MasterCard. And right now, I'm a little bit more cautious on that, but overall, I think it'll be a pretty decent quarter. And I wouldn't expect too many surprises. I'd be inclined a little bit positive, but think neutral to a slight positive tilt into this quarter's earnings this evening.
So it sounds like you wouldn't be putting new money to work in Visa, Dan?
Margin, dollar cost average in, nothing. It's not a standout upside or downside scenario this quarter because these are diversified, global, high-quality businesses with stable margins. So the real flex items that I'm talking about with cross-border are very small in the grand scheme of things in terms of what they could do to the overall model. So I would tell you that this is the type of company, which is a good news story, I would say, where you don't have to necessarily look at the quarter and expect major surprises. It all comes down to, was the market expecting 9% payments volume and they did 8? Or did they deliver 6 when the market was expecting a different number? It's really small changes in expectations here and there.